everyone, my name is Lydia and welcome back to my channel. This is the place where you don't need to start rich to become financially free. So thanks for joining me today, and in this episode we're going to talk about 5 different ways to invest $500,000, the smart way. So first of all, we need to remember what assets are, because when you have $500,000 to invest, maybe through inheritance or through profits of one of your business ventures, one of the smartest things you can do is diversify your asset holdings and invest your money smartly for long-term growth and passive income. Assets basically are things that make money besides your job without being directly tied to your time, etc. So I went through 5 different options here, and the overview is that option 1 is the most diversified portfolio, option 2 has the highest immediate return on investment, option 3 has the most concentrated investment, and option 4 has the highest likely long-term return on investment, and option 5 is the most diversified without crypto. We have fully invested $500,000, and after the course of a year, would expect a stable return of about $43,810. This option is focused heavily on crypto and has a relatively higher exposure to crypto market volatility than the other options presented here. In this case, greater risk offers a higher immediate reward. Volatility can also trend upward and toward the upside, which is why this option is presented here. Now let's look at option 2, which has the highest short-term ROI of around $46,900 in 1 year, and we would distribute this between an IUL, which stands for Indexed Universal Life Insurance, and the S&P 500, Matic, Synthetics, and USDC. We would be working with North American, whatever stockbroker you use for investing in the S&P 500, as well as Celsius, because Celsius offers the highest variety and the highest interest on the crypto you are staking there. And an IUL, which I talk about more in another video as to why it is a good long-term investment. It's a term called infinite banking, and you can go check that out in the description. I linked my other video there. But this has higher immediate returns than option 1. However, the IUL yields are not immediately accessible. This option takes a more diversified and long-term approach by including an IUL for future infinite banking. Both options do not take into account the potential base price changes for Matic and Synthetics, which can be much more volatile than the S&P 500. However, we are looking at a general expected return based on current market patterns. Now, option 3 is the most concentrated, where in option 1 we saw a lot of diversity and looking at maybe a more aggressive investment strategy. Option 2 had a moderate strategy where there was some diversification, some risk, and then some moderate to very low risk assets. Now, option 3 is the lowest risk option that I've put here, where if you got $500,000 and you just want to put it into a wealth management fund with a vendor such as Fidelity or whatever broker you choose, you could expect about 7% returns per year, and it would be about $35,000 on $500,000, and you can let that compound over several years. So having everything in one place can of course be a risk of its own as well. However, very wealthy people may want to park a large chunk of money in a mutual fund to generate a steady passive income for a trust or an education fund or for a charity, etc. If this is the first $500,000 you have made or received, you're more likely to require more diversification and get more exposure to the market upside. On to option 4, which has the highest long-term return on investment. So we would invest in Bitcoin, the S&P 500, and an IUL. It's pretty straightforward, but I think in 10 to 15 years, this has the highest potential upside reward. And why is that? So on the surface, this option does have the lowest ROI, but it is the most basic and straightforward strategy, letting the money sit without touching it. Bitcoin is likely to go to 500,000 within 10 years, and meaning that for Bitcoin purchase for $200,000 today will be worth $2 million when BTC reaches 500,000. Now, I am not a financial advisor, I cannot see the future. However, it's just that the tokenomics of Bitcoin is, whether it's 10 years or 15 years, it's very likely due to the deflationary nature of the asset that it will become worth this much over time. So also, putting $200,000 into the S&P is a good long-term strategy for the stock market with minimal exposure to risks and modest exposure to gains. And the IUL is another great strategy for creating a non-taxable asset that can also act as income in the future, because the cash value of your life insurance is something that is still owned by you, the policy owner, as long as you own the policy. So after 10 years of putting money into your life insurance, you now have a death benefit, but you also have the cash value, which can be borrowed against for retirement income, starting businesses, taking a loan to buy a new house. This is something I cover in another video, and I'm actually planning to make a separate video entirely about IULs and how they work, because it's something that not many people know about, but definitely should. Now, the last option is the most diversified without crypto. After many years of working with people in finance, I know that some people just have their preferences, and this is focused on IULs, the S&P 500, mutual funds, as well as a dividend portfolio. And all of these are different types of market assets that you can buy and earn interest on. So the average return for an IUL over time will be 10% per year, okay? The S&P 500 has a 7% return, mutual funds as well 7%, and dividend portfolios tend to have about 5% returns. So you could expect to have $36,000 in interest in your first year, and this option is tied for the lowest in terms of ROI. It's actually equal to option number 4. However, a young person living on a modest budget could live off of this interest to pursue a new business venture, or write a book, or create something incredible, to invent something. This option is one of the easiest to actually receive the interest from year over year. For example, a mutual fund or a dividend portfolio are definitely designed to allow the owners to live off of the interest, or to receive that interest to their checking accounts in order to use it instead of just letting it compound. Of course, this is up to you and your decision. I'm not here to tell anyone what to do. This is for educational and entertainment purposes only. However, I think it's very interesting to see the diversity of ways that you can invest $500,000 and see what the potential outcomes will be. So keep this content free. I really appreciate when you use the referral codes. For example, this episode was brought to you by Celsius, where you can stake your crypto and earn rewards. Celsius is a highly collateralized and successful company in the crypto industry, and this is why I'm recommending to all my followers to go and check out Celsius Network today. Thank you so much for watching today. I tried to keep this video short. Let me know which of these you thought was the best. Would you choose option 1, the most diversified, including crypto? Option 2, with the highest immediate return on your investment? Option 3, the safest and most concentrated mutual fund option? Or option 4, the highest likely long-term return on investment? I'm really curious to hear what you think and read your comments below. My channel is still small enough where I can respond to comments thoughtfully. And if you don't already follow me on Twitter, you can go check out my socials in the description below, where I'm posting more frequent updates. I like to post more educational content on Twitter, and if you follow me on Instagram, you can get lots of funny memes. So I really appreciate you taking the time to watch this video today. If you found this interesting, please share it with your friends and family. It really helps the channel grow, and I get to keep making more interesting content. If you have ideas for future videos, please let me know in the comments, and I'll see you next time. Thank you guys. Bye.